be potentially a little bit of a bull flag. So we've had this strong move up. We've broken that longer term downtrend. We've moved into a longer term sideways trend for the time being. So we'll see a bit more daylight between the price and that moving average. And from that very strong push higher, we've had a bit of a pullback. Now, when you look at these candles, it's quite interesting as you see that these, these small bodied candles, 3 red candles, didn't even fully erase half the gains of that long green candle. So it's suggesting that maybe that momentum is still to the upside on the dollar. And obviously, dollar strength often seems to equate to equity market weakness. So definitely something to watch here. We are out of hours, US market hours at this point in time, but we do have a bit of a bullish type candle pattern forming now. So this is a suggestion that if it does hold up and it does close the way it looks right now, we could see an extension, some further dollar strength against that broad basket of currencies, the US dollar basket, and then we'd start seeing, 104.35 being that initial target from the move. So we have had a bit of a stagnation or a reversal off that level, but it's more of a pullback from a stronger move up than a dedicated reversal. So slightly bullish on this setup, provided that we see a strong close like it looks like right now. So further dollar gains targeting 104.35. Now, if we look at the euro dollar, obviously euro has a large weighting in that dollar index. So similar, not quite the same picture, but what we do have here is that we've had that longer term uptrend being broken. So that trend of euro strength against the dollar has now been broken. I think it's a sideways trend. At the moment now, the short-term momentum is to the downside, where we see euro weakness relative to dollar strength. And I say the bulls are looking for, and we kept this line in from the last time we did this, but you're seeing it to be bullish. We want to see a bit of a break above that downward trend line before we start targeting levels on the way up. Probably 1.093. Probably that initial target if we do get that, but at the moment this resistance is holding. This resistance sitting at 1.0840. If we do have this bearish candle forming, could suggest more downside and possibly a retest of that 1.07630 mark. And if we get a strong close below the halfway mark of this green candle, I think that momentum suggests continuation to the downside. If we are looking at shorting, maybe having a stop loss and a close above that 1.084. Now, the bulls obviously would like to see this red candle erased and see a strong close above that before targeting levels on the up. But at the way it stands right now, I think slightly more bearish than I think bullish at this point in time. Now, looking at cable. Cable has found some tentative support there at the 1.2543 level. So we had this range that was sitting over the last couple of weeks. We've had a bit of a downside break to that range. Seems to have found a bit of support here, about that 1.2543 mark, and a very tentative reversal there. So longer term trend though for cable is still up if we're using that metric of the price relative to the 200-day simple moving average, that blue line on our chart. And the price is still above that, but there has been some momentum, short momentum to the downside, and we are testing this 1.2543 level. So if this, I wouldn't be backing this bullish reversal here. I don't think there's enough momentum. It seems more of a consolidation over the last 3 or 4 days. But I think if you are looking to be a bull, then you might just want to just have this little trend line here and just wait for the price to just sort of, suggest that it, breaking on the other side of that line, that short-term move lower has ended. Alternatively, we are quite close to that 200-day simple moving average, but we're still above it, so still not looking at short positions just yet on cable. But a close below the 1.2543, we'd start targeting this moving average and possibly 1.2343 on the downside. It's a bit of a wait and see approach. I'm sure we'll get some action later this afternoon. Moving over to some indices now, starting off with the US Tech 100 or the Nasdaq 100. Now, interesting. We're in an interesting phase of the market, and certainly it's not the easiest phase of the market because we've had quite smooth sailing for a while. We've had this longer term uptrend has been quite good. Price is still above that 200-day simple moving average. So Nasdaq's still an outperforming index, still longer term trend is up, but in the short term, we're seeing quite a bit of volatility starting to step back into the market. And you see a strong move up followed by a strong move down consecutive days. Shows a bit of a battle between the bulls and the bears, at least in the short term. So longer term bias is still considered up, but we are looking at a short term range between levels 14,660 and 15,300. I think the bulls will want to see a move above that. But then if we do get that, a push above that, you'd have this double bottom reversal pattern suggesting the end of the move lower and push higher. On the downside, if we were to break on the downside, probably just wait on our hands, see where the price settles before looking for long entry, provided that the price still stays above that 200-day simple moving average. So right now, a bit of a wait and see approach. We're sitting in a short-term range. Longer-term bias is still the upside, but not very much conviction in this real rebound. So we had this move up and we had this very aggressive red candle move down. If you look at these green candles, it's taken about 3 green candles to erase only half of the losses of that red candle. So a bit of a, to me, it's a bit of a suggestion that maybe that short-term momentum is a little bit to the downside. But we're respecting these levels and we're considering this the range to be trading between right now 14,660 and 15,300. Now, when we look at the S&P 500, similar picture. Longer term trend is still up, so our bias to trades is still to the long side. But we are a bit concerned about this sort of price action in the beginning, sort of a weaker move up, often aggressive move down. We're sitting in a range. Probably take this level out, this 4385 level, extend that range to where the price did find just above that support low, sitting about 4,330. So that's a short-term range. I am very interested in this picture here because if this price doesn't hold this level, if it doesn't manage to break through that 4,460 level and does start breaking below, pulling back and breaking below that, we could have a bit of an indication of a trend reversal. The longer term trend is still up, but if we start getting this bit of a head and shoulders type formation confirming, well, it might be a suggestion that we are reversing, at least over the short to medium term, our trend direction. So bulls will want to see a break above that just to negate that pattern, that possible pattern that's not complete. And want to see a move above that 4,460 level. Then we start targeting moves back up to about 4,590, 4,630 within that range. But we really, if it does fail at this level and does pull back, we really want to watch and see how the price approaches this 4,330 level. Because a break below that would put a head and shoulders pattern in play. It would be a suggestion that, well, maybe we're having a short to medium term reversal in trend direction. Now, looking at the DAX, we are in a range-bound environment on the DAX, so there's no preferred trend bias right now on that. We've had price reversing off our support level and then having a bit of a pullback, so it's really fumbling around here. The key level here before we start considering a new downtrend is 15,485. So when the price was to start moving below that, we'd start considering a downtrend. But there is some upside momentum. We have broken above that 15,715 level, which I think if traders are long, might consider using a close below that as a stop loss. While targeting this 15,990. I want to see a break above that to unlock further gains towards 16,330. I think if we do get that, where to put your stop loss always becomes a bit of a tricky one, but maybe close below a 1 or 2 day low, provided it gives enough sort of breathing room and, relative to the individual's threshold for risk. So moving the FTSE 100. Now, longer term trend is sideways as well for that FTSE 100. We've been trading between the levels, which is the approach that is preferred in a range-bound trading environment, which is over the short, medium, and longer term. We've been trading off the levels. It's been working out quite nicely. We've had a nice bullish reversal off that 7,200 level. We've now trading through that target of 7,410. Now, if we do get a close above that, that would suggest an upside breakout of that level, and then we'd start targeting 7,560. So at the moment, it is breaking. But we'd like to just see the price settle there by the end of the session. So a close above that level is the filter that I prefer to use. Well, not for everybody. Some people will use an initial break. For me, I just want to see where we end that session. And for me, so looking for a close above that level before targeting 7,560. If we do get that close, then again, looking at a stop loss on below a 1 day low or 2 day low. And I think there is enough breathing room to have it below the 1 day low for that particular move. The alternate side is that today's gains do falter and we do see a pullback. If we do get a negative close here, a doji type, we'd be looking for follow through with the next candle, another red candle, to suggest a short type trade idea and targeting 7,285. At the moment, where it stands, longer term trend is sideways. We're having a breakout of 7,410, and we are targeting a move. If it does confirm to close 7,560 on the FTSE 100. Right, maybe go to some commodities. Brent crude. Now, Brent crude is an interesting one. Initially, we started talking about the possible head and shoulders. So that longer term trend is sideways. In the short term, there's been an uptrend. And then we have this, which I've labeled L, H, and R, as being a possible head and shoulders type formation. Now, I do think that what's happening right now is kind of negating that, as we do start to form a bit more of a consolidation. There is a bit of an upside momentum, but the pattern is there. And if you were trading it, this red candle would have given a breakout on the downside. We did come close to our initial target of 81.60, but we are now rebounding from what was oversold territory. I think if we start moving above this right shoulder, 85.50, then it says, well, this pattern has failed because, well, the price is starting to make higher highs now. And our suggestion from a head and shoulders pattern is that the price is now moving to lower highs and lower lows from after being in an uptrend where it was making higher highs and higher lows, hence the term reversal. So we do have this pattern in play. It's becoming dangerously close to failing if this price does push a little bit further, although we have tested the lower support levels. Right, gold. So spot gold is moving towards our target. So long-term trend is sideways. Price been whipsawing through that 200-day simple moving average. We had talked about this bullish reversal pattern recently. We're targeting a move towards 1,930. Now we are making a tentative move up towards that. I think if traders, when we look at sideways range-bound environments, we do like to trade between levels and two levels rather than riding out trends, like would be the approach for trend following systems. So I think if you are fortunate enough to have caught the long on this, I might be considering looking at taking profit on towards that 1,930 level, or the price starting to show a bit of a candlestick reversal because we are sitting in overbought territory right now. Overbought signal would only really be relevant when you see it move into overbought and then ticking back out of overbought territory. But there certainly is a warning that things maybe the short-term rally is becoming a little bit overheated. Where I'd start to maybe not worry too much about that overbought signals. We do see a strong break above 1,930, and then we'd target 1,980. That short-term momentum would supersede the warning. You want to see the price retracing, reversing, and that stochastic moving back out of overbought territory before it gives you a relevant signal. So for now, rebound continues. We are close to that 1,930 target. People trading towards limits would be looking at possibly exiting on a move towards that. Breakout traders would be looking for a close above that target, 1,980. I think if you are long, trailing a stop below a 1 or 2 day low, depending on threshold for risk, might be a consideration. Last but not least, spot platinum. This one's conformed quite nicely. So longer term trend is that of a sideways range-bound environment. In the short term, we've looked at this move lower and talked about this double bottom being a reversal pattern, and as a function of this preceding move down. So we had this move down, we have this W shape. That W shape suggests the trend has stopped making lower highs and lower lows in the short term, or the price has stopped making lower highs and lower lows in the short term. It's now started to make higher highs and higher lows in the short term. So short-term momentum is up, short-term trend. We are seeing sort of a positive momentum. We've traded through that 940 resistance target, and now we are targeting 980. Now this line is historic. We probably look at this high being quite relevant as well, maybe even 995 odd as being that target. Now when you see a long bodied, if you are trailing your stop on a move like that, this long body candle might be a bit too long to run your stop loss below a 1 or 1 day low. And quite often we can look at the midpoint of that candle, which is sitting about 955 odd on that, a move below that. So the Marabuzo often acts as a level of support. And so we say moves below that level of support, which is a halfway mark of a long-bodied candle. In this situation, might use that as a stop loss indication. All right, that's all the charts from me. I'm Sean Mearson, a senior market analyst at IG South Africa, and thank you very much for watching.